What's up, guys? So, appreciate it for 4K. This is just going to be a long rant, no editing. Just going to be walking through all my trades that I took this week on indices. I took 5 trades, one each day, all around the 10 o'clock open high low close or open low high close. And yeah, let's get into it. So, coming into the week, right, we see that we have this huge drop on Friday, and we're pretty much opening near these lows. So, specifically on a Monday, you don't really expect the biggest range, right? It's historically it's the smallest range day out of all 5 days. So when you see this specifically where the previous day prints a large range and is going to hit an objective, we definitely don't expect a large range day. So that's already setting the narrative in a sense. Now we just need price to align with that narrative. And this is what we see when I come into the charts, right? If I play price to the 6 a.m. candle, right? So I don't want to short bearish, right? Because like I said, not expecting the biggest run through this low. We're expecting a smaller range day or maybe like a reversal candle type of thing. And this is setting up perfectly for a reversal candle. So when you want to trade a reversal candle, right, it has to form a certain way, right? It needs to open low first, put in a reversal early on in the day. So ideally before 10 o'clock, if it's going to be a New York reversal, and it's going to be a 10 a.m. New York reversal, then ideally it's within that first hour of that 4-hour candle because we need enough time in the day to come back to the opening price. And one thing about reversal candles is we know that this candle doesn't support bullish expansion, so we simply must adjust our targets, right? It doesn't mean we can't trade the day, right? We just need to adjust our targets because we know that if it's a large opposing run, it doesn't support a bullish day, so we're not going to get expansion past the daily open. If this is something that is very logical and repeatable, right? And we need it to open low first, right? Because when we think about a bullish day, right, it opens low first, but also we want session highs and low resistance liquidity to trade back into. And we don't want to trade there's two types of reversal candles. So there's this one where it's a more fluid motion where price opens low first, puts in some reversal to trade back into the high. And there's this type of reversal candle where the daily opens high first and then opens low. We don't want to trade this, right? Because this is more like seek and destroy, right? Where there's nothing to really target really at this point, right? We want to target low resistance, right? And if we already made this open high first, what does that support? That supports a bearish day, right? So we don't want to trade that. So this is mechanically how we define it. This is in my course, how to trade a reversal candle. So when I drop lower, I need to trade away from some point of reversal or some, key level to get to these highs, right? Some protected swing. When we think about protected swings, ideally they're highs and lows, right? When I look to the left, we can't use this. We didn't manipulate it. So we need some sort of closer proximity level to trade away from to get to this high. As you see, it's just 1800. It's an unestablished high of the day. It's another reason why we want to trade this profile, and this is why we want it to form this way, right? So when I look at the assets, look at the close, right, with this hourly close. So this is 9:30. So what else are we doing? We are also pairing a manipulation with the driver, right? So 9:30. Now, some people ask me within the lens, right, why did this fail, or was this a valid entry to take, right? Well, yeah, I mean, this could have been a low day for sure, right? We take out this low, we manipulate it, and we close above, right, the opposing candle. But what is the if-then scenario, right? If this is going to be the low day, then the driver should do what? It should expand away from it. But what do we see? Right? It clearly disrespects it. And if you guys know me, you guys know that I always pair my entry with drivers or with manipulation, right? Or I need the driver to confirm. I'm always confirming narrative with drivers. It's one of the biggest parts in my trading. And on a day like this where it's super low probability, you need to be waiting for the driver to confirm narrative, right? So when we look to the left, if this is going to fail, then what is literally the only point for price to reverse from? It's this swing point, right? If we don't reverse here, then there's two red flags, right? For one, there's nothing else to reverse from to the left, right? And also, the driver failed to reverse the day, right? When the driver fails to reverse the day, that's already a red flag in itself. That's why I don't prefer 10 a.m. 4-hour New York reversals. I prefer 10 a.m. continuations. I prefer 6 a.m. New York reversals. So when we look at this candle here, we clearly see a manipulation of this low. Now compare this close to NQ. What do we see, right? We're actually closing below this low. So this is how we gauge strength, right? Without an SMT. As you see, we already know ES is stronger here. And when I look at YM, it's actually the strongest pair. But here's the thing about this day. I don't know how far, since I'm expecting a small range day, I don't know how far we're going to go beyond this level. But I can anticipate that price on all three assets will likely hit that Monday new week opening gap or the 1800 high. I just don't know how far we're going to go. So this is my target. So it doesn't make sense for me to trade this asset if we're already so close to it. If I can measure this out right, we're like super close to it. We're like 50 points away. So I'm going to engage with the asset over here, which is ES, which is the kind of like the middleman. It's not the weakest asset, but it's not the strongest asset, right? So just because one asset reaches a level first, that doesn't mean that the SMT is going to hold, right? There's a big misconception. This is something we can get in. You're going to see a lot of examples this week of this, right? It just means assets are lagging behind. So what we have here is a GxT ideal formation where the low of day is created from manipulation. The wick is formed from a protected swing. We want to trade away from protected swings because when you manipulate, we distribute, right? And the distribution is creating the body. Now in this case, it's pretty much going to create the wick because this is our target, so it's going to create a small body, but I digress, right? So what we have here is we're also not going to trade within the 6 a.m. candle because it doesn't support expansion. So what I'm viewing this as is a 6 a.m. New York reversal, and I can expect a 10 a.m. continuation, right? Because if we're going to be fading the daily candle, we need to be trading in between or within a 4-hour expansion candle to our draw, right? So when I drop to the 5-minute, this is simply the fractal model at 10 a.m. open, right? So if I just play price, we have that V-shape, right, reversal signature that we talk about often. Here's 930. We're starting to close above, right? So this is validating this as a 930 reversal. So I'm just going to delete this for cleanliness here. So what we see here is we make an open. So we open high first, right, which is fine. We're not trading into anything significant when we think about a bearish candle. Ideally, we open low first, but if there's still enough time in the candle to expand, obviously, and this open high didn't trade into anything relevant, these are all like failure swings. These are all failure swings, right? When we think about all this low resistance liquidity, we would never frame a reversal off any of these highs, any of them, because they're low resistance. They're all failure swings. So we would frame a reversal off the external range, right, the very high, right, because when you look beyond that, there's nothing else to manipulate. So there would be no reason to return, right? So this is mechanically valid to enter right now, right here, right? Because now we can assume that the 10 a.m. wick is in, right? We see the price open below the 10 a.m. candle, which is right here. See that little dip, right? We're also within the EQ of this range, right? We don't want to see these super deep pullbacks. That's an invalidation, so this is fine, right? We have momentum. Now, what do we notice about this, though? If we enter this trade, the RR is skewed, right? It's not 2R, which is what we demand. So you have two options. You can do something like this, right, where you demand 2R on a retest, something like that. But I just waited until we got some sort of smaller range, which is right here. Right, so this is what I enter on the retest. I put my stop loss to the body, and you see that it's exactly 2R, basically. So this is my trade where we see the 11 o'clock open right here. It's opening up within 1 hour candle. So in a bullish order flow, right, on our way to a drawn liquidity, we expect opposing candles to be, respected. on our way to a draw liquidity, we don't anticipate these deep runs until we reach the draw liquidity. That's when we can get into phase of price. But this manipulation should be all expansion until we reach the draw liquidity, right? We can have these small, retracements that actually create the opposing runs, but those retracements, those small retracements, should actually be what supports price higher rate. So this is a 1 hour open here. As you see, price comes into it, and we hit our draw. Simple as that. Now, price does go beyond this level, but that's not what I care to anticipate. Right, it goes much further, I think, if I remember. Yeah, but it's very choppy, right? When we reach a relevant level, right, we can get into phase of price, which is consolidation, right? So that was Monday, a very simple trade, right? 6 a.m. reversal, 10 a.m. continuation, trading the reversal candle profile of 9:30 reverses the day. Very clean. It matches our expectation of a smaller ranged day anyways. So that was that day, right? So let's go into the next day. What was I anticipating? Now, this day threw a lot of people off. Now, when you have an economic calendar like NFP, this is my expectation coming to the week, right? Where I was expecting price to kind of hang around in this range and then let NFP pick a side, right? But of course, when Trump, talks about tariffs, it's pretty significant. Because when you look over here, obviously it's pretty significant, right? You get these huge range days, we gap lower and stuff like that. So that's kind of what, made price leave this range. But this was not the day of the tariffs, right? This is Tuesday. So I'm not expecting a large range day, right? I'm not expecting price to really displace from this fair value gap lower. I'm not expecting it to displace higher in the range. More of a smaller range day. Again, this is logical, right? So when I look lower on the lower time frame, this is when I come into the charts around, 9 o'clock. And again, I'm going to be referring to drivers. So when I go to the news economic calendar, there is no news on Tuesday. There's only 10 o'clock news, right? So we're going to use that to our advantage here. So this is what threw a lot of people off, is they saw this SMT. And there's SMT on both sides, which is already a low probable condition when you have SMT on both sides. But here's how we actually know which SMT is going to hold, right? So here's the SMT that we saw, right, where ES is taking out this low, NQ is taking out the high. So that's that divergence on both sides. But how do we know which one's going to hold, right? It's very simple, because one asset is lying right now. One asset is lying. One of these SMTs are going to break. And so, yeah, how do we tell, right? It's pretty simple. Which phase of price is telling the truth here, right? When you see this SMT, right, we manipulate this high in NQ, and we displace away on the stronger asset, creating a fair value gap on both assets. So when you run out this low over here on ES, what phase of price do we get? Consolidation, shown by this inside bar on both assets. Not only do we get inside bar on the weaker asset, but also the stronger asset, right? Because if this is going to be a true SMT on the stronger asset, then we'd want to see the asset, the stronger one, displace away, right? But we want to see via SMT, when an SMT gets created, we want to see both assets trade away with strength, right? But we clearly see that both assets oh my god, I can't talk. Both assets are consolidating, right? So it's very telling on what price is going to do. That means that NQ is just lagging behind, right? And we expect this SMT to break at the lows. Does that make sense? So when 9:30 rolls around, if we have an established high to trade away from to get to this low, right? We don't want to see this break. We want to see the driver either expand away or make an opposing run and then a close through, which is exactly what we see when we play 9:30 out, or the 9 o'clock candle. So we want this becomes our invalidation point for continuation lower. So when I drop lower, what do we see? We see a reversal, right, with 9:30 candle. So we're pairing, again, a continuation away from an established high to get to a draw in liquidity. We're pairing that with the driver, right? We see the driver make an opposing run, and we're closing through. So when I go to the 4-hour charts, what do I see? I see a swing point here. And again, I don't care about this closure. It doesn't matter. That's where a lot of people go wrong as well. So all I'm expecting for this day, because it absolutely makes sense to go higher. When I look at this previous day's close, it makes sense to go to this fair value gap, right? But all I'm trading here, guys, is just to this low. Okay, but I'm gonna trade to the weaker asset. What can I draw to on the weaker asset? Well, obviously this low and EQ of this range is, which is what my final TP was. It's very simple, right? I'm not expecting a huge range day this day, and it logically makes sense. So when I play price here, right, on the 10 a.m. open, what am I going to trade? We have that 10 o'clock red folder news. So if you've already made some sort of manipulation at 9:30, then what should 10 o'clock do? It should expand away. So that's what it does, right? So I can simply take this trade. I can't remember if I enter on the 3-minute or the 5-minute. I don't remember, but it's on my Twitter, whatever. But I put my stop loss around here. So I never put my stop loss at the very high. Doesn't make sense to do. What are we also seeing, guys? Expansion met with expansion, a reversal signature, right? So here's my draw on liquidity. It's like another 2R, around 2R, a little bit over. But that's it, right? Very simple. What do we see at the lows, right? A retracement signature, right? So this is not a reversal signature where we see all these lows. So you never want to trade away from this. So yeah, this is my trade, right? 10 a.m. opens up here, or actually opens up here. We're just trading the fractal model essentially, right? Right, and it hits your draw, right? So at the same time that ES hit, EQ of this range here, NQ is hitting these relevant levels, right? Right, so these were failure swings, right? And this is not SMT, right? Like we said, we already know it's just a lagging asset. So when this asset trades into this level over here, the stronger asset, this is a relevant reversal point, right? Because when you look at the space between this low and this low, there's nothing beyond this low to trade into. So that's very important to TP here. And we could have longed here. It makes sense, right? Because now the low of this candle is creating for manipulation, but there's just no trade for me to take, right? There's no 30-minute close. There's no hourly close. And price already traded into these equal highs by the time you could even get an entry. So there's no trade for me there. But that was my logic, right? Just taking a little piece out of this day is all. It's all you need, right? And when you think about phases of price delivery, right? We expand away, and we have some sort of consolidation where there's a couple ways price can consolidate. So for one, it's like this, where it just stays inside of a box right here, right? But there's another way where it's like, what's the seek and destroy, or a broadening formation, right? Where it's taking out each side of the range, right? That's another form of consolidation. So when you see this PA here, price can't displace through the high or the low, that's just another form of consolidation, right, for reaccumulation. So it just makes sense for buys here as well. But again, there's no trade for me to take there. So those are my two trades around the 10 o'clock open. Pretty simple, right? Not taking too much out of the day because low probability conditions, right? But here is the day that threw a lot of people off here was Wednesday. Now, kind of have to disregard this day switching bearish because it switched bearish within the last hour because we had that Trump tariff red folder news event at like 4 o'clock. So this is a bullish day at one point, right? So I'm going to show you guys this. So when I come into the charts here, we have more of the same thing where we can't displace through highs. We're making super deep pullbacks. We can't displace through lows. We're going to see at 9:30. So what is this a kind of representation of? It's a higher time from retracement or just consolidation range, right? This is added narrative that this fair value gap will hold, right? We're seeing these super deep pullbacks, right? Because this is what actually creates low resistance liquidity when we think about it, right? All these lows, right? So whenever you have this type of structure on the daily and you see this on the 1 hour and the 4 hour, you should already know what condition you're trading within, right? So when we think about a reversal candle, again, what do we want it to do? We want it to create its high early on the candle, like we see over here. We want to open low, and ideally the low is put in from a key level. So that's what we see. But I'm going to take your attention to RTY over here because this is what I was basing my trade off of. So again, we're just consolidating, right? And at 9:30, we run into this short-term low, right? You can see you have your range high, range low. When I go to YM, the correlated asset to RTY, we actually take out this range low. And again, we're expanding and we're consolidating. We're manipulating the range low, right? And we're going to be targeting the range high, right? When we think about a reversal candle, we're creating a very large opposing run. So we know that price will not likely expand much past this daily high. Now, when you have specific targets above the daily, high right here, you can target them still, right? And it's important that we didn't open high first like this, like super large opposing run, and then come down here. That wouldn't support it, right? So we can already mechanically define when we can trade these large opposing runs, right? So what we have is another voice crack, crazy. What we have is a SMT, like a larger range SMT with RTY, right? And then we have a two-stage SMT where the 8 o'clock candle has a divergence with the 9 o'clock candle. So kind of like a larger range SMT followed by a smaller range SMT, which is like an SMT that confirms an SMT. But what we see here is very important, right? And this is what led me to pick actually YM over like NQ and ES. So pay attention here, right? So what we see is when I go drop down to the 5 minute, you're going to see this is very important. This to the narrative that we're going to go higher is whenever you have a day, right, that's is maybe in a key level, like maybe a fair value gap, or maybe hit a key level prior to a driver, but hasn't reversed yet. You need the driver to reverse, right? Because that's added narrative, right? If the driver fails to reverse, then we're not expecting like 12 o'clock or some random time to reverse the day. So that's kind of the last chance, and it's high probability when that driver reverses. So that's what we see here, right? We're not pairing a manipulation with the driver. We're pretty much pairing like continuation almost, right? We've already hit this key level prior to the driver, I do believe at least, especially on NQNES, right? I think we already hit this level down here. Yeah, we did. So it's just expanding away from that, right? Which could be considered a reversal, but you get what I mean, right? The driver's expanding away from that, which is what we want to see with a lot of momentum. We also see this divergence, right, where ES and NQ are taking out this short-term low, right, at 9:30 or a little bit prior to 9:30. YM is creating a higher high. And that's not really what's leading me to take YM and ES here. When we look at the 4-hour candle, can we trade within this candle? No. So because it doesn't support expansion higher, right? So we need to wait for 10 a.m. to open. So that's what we're doing. Now, when you look lower, do we have a reversal already within 6 a.m.'s wick? Yes, right? We have a swing formation on the 1 hour time frame. So I'm expecting candle 4 or 10 a.m. to open low and then expand higher, right? So why do I pick this asset over here? So let's go to RTY. So what are we seeing here? Within the 9 o'clock candle, we're seeing that strength switch, which is something you always want to see. Like I mentioned earlier, when the weaker asset hits creates the lower low, right? You want this asset to also show strength. And a lot of times you want this asset to switch strength to the stronger asset, which is what we see, right? With this 9 o'clock close, we actually do not take out London highs. So we see that strength switch. So now we know that these two assets are in correlation, right? Which is a very, very high probable thing to see. And this is another reason why I'm picking YM over NQNES. So when you think about all these highs over here, like London highs, we're super high in a range. So when we take out these levels, we're going to get some sort of phase of price. And we want to see a continuation signature through these highs to get to our draw on liquidity, right? Which would be higher. So when I play price here, you see that price hits this key level or hits these highs. And you can already anticipate some sort of phase of price, right? Because we're taking out some pretty relevant objectives. Now, they are technically failure swings, but you see the space between all these highs here, right? If I go on ES, we're actually creating a divergence here as well. So you see the space between these highs and this highs. You're going to get some sort of reaction, especially after such a large expansion, which hasn't endured really any new phase of price. It's just pure expansion. So you get this SMT here. Do we expect to hold? No. but we're expecting a new phase of price, right? So you can't enter right here, man. You have to wait for that new phase of price. So what is a continuation signature? It's simply a close back, above opposing candle after we engage with a relevant level. Because if we close back above, then that clearly means it's a failure to manipulate this high, so we can continue to this objective right here. So why am I picking NQ and ES? Why am I picking YM or RTY to trade over ES and NQ? When I look at RTY, we already have this continuation signature where price engages with this relevant level, and we get a closure through, right? When I look at NQ and ES at the same time, we have yet to get that closure through this point, this opposing candle. So I'm going to assume that YM and ES, oh my god, I keep mixing up my words here. I'm going to assume that YM and RTY are the leading assets, right, within the indices. So if I expect, this strength to be switching, right, and the stronger pair to continue through these highs, then what can I expect YM to do? To also continue, right? So when I see the 10 a.m. open and then create these opposing candles, I can now assume that 10 a.m. should not reach below this opposing candle, right? I can assume the wick is formed right here, essentially, right? So I can set my limit here, right? Because we already saw a continuation signature through RTY. So that's what I do. I set my limit here, right? We get tagged in, and there's multiple entries here. You could also take this one as well. It's just very close to this high. And yeah, we get a continuous signature through these highs, and we obviously expand, right? So that's what we need to see, though. We need to see that continuous signature through these relevant levels. Do we expect a reversal here? Not necessarily, but we need to still see that continuous signature, right? Because if we enter way up here after hitting this key level, it could easily just stop us out, make a small retracement, So you want to have that confirmation there. So that was my trade on YM. Very high probable in my opinion. Yeah, very high probable. So now let's move on to the next day here on Thursday. So this is when we see this, tariffs just kind of reverse the whole market, right? So now we can kind of assume, right, after this opposing candle close here, that we're going to reach this level down here, right? This swing point on the daily time frame. So when we play price forward, I'm also trading the 10 o'clock candle here. So another thing about divergences, right? So what do we see on YM? We see price has manipulated this low or hit this low way before NQ and ES. So another thing to note here is what do we see? What are we seeing, right? So look at this daily close. It's obviously a lot stronger than ES and NQ, as you see, right? We have a lot larger body. So we can kind of assume that YM is a stronger pair here. But what are we seeing intraday the next day? We're seeing the strength switch. So what does this mean? Like strength switches all the time between assets for assets to catch up. This is what allows assets to be correlated. So this is something that's good to see, right? And so if the strongest assets, the weakest asset here is going to fail to manipulate this low, and we're going to continue through it, that means NQ and ES are just lagging behind. They're just going to hit this level later on in the day, right? So what we're also seeing is we have this new day opening gap where we're putting a divergence at this high. So now we have the high of the day form for manipulation and London session, as you see. That's really good to see. Right? It's also the GxT ideal profile where the high of day is created for manipulation, creating the wick so we can expand away. So we have drivers this day. And I was not awake at 8:30, but this is a totally valid trade to take, right? It's almost like what we saw on Tuesday where this SMT is creating a fair value gap. So when I look at the 4-hour time frame, we have this fair value gap that we could, assume internal, external. But when you get this manipulation and CSD, your invalidation now moves from the 4-hour fair value gap to a much smaller and compact invalidation points. So now, if we're going to truly reverse from that 4-hour fair value gap, this high needs to stay intact. If this high is going to stay intact, we need to see a couple of things, right? We want to see, expansion signatures where we're expanding and failing to manipulate this low, which is what we see um, when we see price do this, right? We're consolidating after we hit this level, right? So if we're going to fail to manipulate this low, we're going to continue to this low, which further supports this idea of NQ and ES lagging behind. But we also need to see shallow retracements, right? We don't expect these super deep retracements, right? When we think about this range, we don't want to see OTE like way up here. That's an invalidation. So this fair value gap really is our new level that needs to actually hold, right? If this high is going to be in play, right? Because this fails, then that's not showing weakness, right? Obviously. So if we consolidate prior to a news event, right? Or just after expanding, that's already a sign we're going to continue. But we always want to be trading away from an established level, which we are doing. We're trading away from an established level, but at this point, price is a bit far away from that, right? So within continuation or within expansion, we still want to be trading within maybe a smaller range, protected swing. So what that would look like is if we manipulate this high, right? Now we're like closer to some protected swing, right? Rather than being really far away. So we can kind of trade away from a protected swing in a sense. So when we drop lower on the 30-minute time frame, this is what we're seeing, that consolidation. So what we're seeing prior to the driver is we're manipulating, right? So if you manipulate prior to a driver, what should that driver do? It should expand away, right? Which is what we're seeing. This is what you're going to see. When we drop lower, what do we see here, right? Expansion met with expansion, that V shape. This is that reversal signature that we're looking for, right? So we can already anticipate that 830 would expand away from this range, this opposing candle. So you can set an entry right here. Now, if you go with 5 minute, you get a little bit smaller range here. If this is a news event, it's going to have like some sort of retracement. So you can put a stop loss maybe at this breaker, just this high to low. I would never put up way up here. It's just like kind of unnecessary. But yeah, I would put it right here. Now, I wasn't awake, so you can call this hindsight or whatever, but I would 100% traded this, but I would have gotten some sort of break even here for sure. Like you see this consolidation. I would have held a runner absolutely to here. There's no reason to take partial or your whole position off at 2R here. It doesn't really make sense. You can partial there. So whether you partial here at 2R and then go break even, but you have to go break even here because of how far price goes. So it's a very good trade. Price runs like 3R total, but I would have taken a partial win here because it comes back to break even. Now we have 2 drivers this day, actually 3 total. So we have 8:30 here, right? We have 9:30 as always, and you also have 10 o'clock. So you see 9:30 makes an opposing run to the draw, right, and takes out this high that we saw on the 30-minute time frame, right, and leaves these equal lows, which is important. Now, do we expect price to reverse from these equal lows? No, we don't. When you go to YM here, we're also seeing a continuation. So it would be different again if YM was showing strength or something, but it's still not. This 9:30 close, look at the difference, right? We're having a bearish close. We're closing below this CSD here. So why am I not picking YM to trade here? It's just because I don't have any close range targets. When I look on NQ and ES, we have this close range target, which is this low. So when you look at the comparison here, we have this close through here on the 30-minute time frame. It's a bearish reversal candle. So we're still manipulating. So we have 9:30 manipulation of this high, right? Which is internal manipulation to the daily range. And we go to NQ, we don't have that. So we can already gauge that NQ is the stronger pair here, obviously because it doesn't print a reversal candle. But you can still anticipate price reverse on NQ because this is the only level to reverse from, right? If we don't reverse from this level here, we're going to go probably this high, right? Because there's nothing beyond this level. So price pretty much has to manipulate this high. So what's a confirmation to that, right? If we manipulate prior to driver, what should the driver do? It should expand away, which is what we have. We have 10 o'clock news on Thursday right here, right? PMI. So when we see price start to expand away, we can already assume that, again, NQ is just lagging. It's the stronger pair, but it's just lagging behind. And I compare 10 a.m. with that. So here's 10 a.m. open. Or sorry, not yet. So 10 a.m. open is this next candle in a minute. So boom. So what is it doing? It's expanding away. which confirms narrative. We can already anticipate this stuff, but when we see it live, then that just confirms it, right? Um, so what do we have? The fractal model, right? We have this closure here. Now we're just trading continuation opposing candles. So I just need to close below here, and that's going to validate it. And there was no entry, by the way, on ES. So this is why I'm actually choosing, like mechanically, I can't even trade ES because there's no CSD here. Now you can treat this as a CSD, like you definitely could have done that. But I'm not expecting, this asset to actually reverse, right? I couldn't anticipate price to be the most high resistance within expansion. So on its way to the drawn liquidity, you will see the, like deeper pullbacks, right? It's just going to take longer to get to this low, but it's going to get to this low, right? We know that. So if you look at my execution on Twitter or Instagram or whatever, I don't actually get this retest here. I want to market execute here, but as you see, the aura is a little off, right? So I'm kind of demanding a little bit higher fill, and I can just kind of move it down here because price is not going to reverse right when we hit this low. That just never happens damn near. So it's going to make a little bit run past it. So as long as I can get 2R from that, then that's fine pretty much, right? And that's what we get here, essentially. Right? And why wouldn't you enter this? So this is another question I got. And it's very logical why we wouldn't enter this order block here. I'm already in this position, by the way. And why we're not going break even here either is because at the time of this order block, what do we see ES do? It actually takes out this low. So you wouldn't want to be entering on ES down here either, right? Because you couldn't endure a new phase of price, which is what we get. You can already anticipate that. This is a relevant level. When you look to the left, there's nothing beyond it. So this is a relevant level that you probably will get some sort of pullback or consolidation at. So you wouldn't want to be entering the stronger asset here, right? And I'm anticipating some sort of, this could easily get taken out because of that, right? This is what we see, right? But we want to see it get manipulated, right? Which is what happens here, right? And then price continues. I don't even remember where exactly I TP'd exactly, but I know my entry was this, right? So you can check Twitter or whatever. All these executions are on Twitter, of course. But again, what this was, we have a swing point on the forward time frame, anticipating that 10 o'clock will expand because prior to 10 o'clock we had a 9:30 manipulation. That news event expanding way is literally narrative, right? So yeah, that's why I traded this asset. And you can see it went much further, but that's not things that I can anticipate, right? And not really things that I care to anticipate. Now, when we go to Friday, this is an interesting day because we failed to manipulate this low. So we could expect continuation, but when I come into the charts, because it's NFP, right? I want to be at the charts at 8:30. We see price already expanded a very significant amount lower. So if you were bullish here, I'm not mad at you. If you're expecting some sort of bullish, run back in the range, that could happen, right? And that's what I was possibly anticipating. Now, I don't care to marry a bias here. It's a simple if-then scenario with every single day. Every single day it's an if-then scenario. So if this is going to be a bullish day where we see some sort of move back within the weekly range, it could make sense. Then what do we see prior to the news event? We see some sort of reversal, right? So if we wanted to go bullish, when would we go bullish? It's within these news drivers, right? Or like 8:30 NFP or 9:30. You want to see price expand higher, right? If it's not going to expand then, it will never expand higher. Because again, we don't expect reversals or continuations at some random time in the day. I'm telling you, the way these drivers actually, react to price and whatever to your narrative, it literally confirms your narrative. So what I see, 8:30 do is really nothing. This is the hourly candle at 8 o'clock. NFP doesn't really do anything. And then I look at 9 o'clock. I'm also waiting for that because I don't want to long this day. I also don't want to short it. I can't short it. There's no fractal model here. So now we get a fractal model. We see a 9:30 reversal, right? You see that? So we're on a fair value gap, and I see that 9:30 and 8:30 can't expand higher. So what is that telling me? That we're not going to go bullish. We only can do two things. It's either consolidates for the rest of the day, which could make sense, or we are going to expand right into this low. This is what we did. So again, another thing why I'm not selling within the 6 o'clock candle, because we do have a 30-minute close. You could have taken this, and there it worked out. It worked out. But when I look at the 6 o'clock candle, the range is already exhausted, right? It's a very large range, so I'm not really anticipating price to continue that. It would more so wait for that new 10 o'clock open, which is what price does. So as we see, if 9:30 reversed, then what will 10 a.m. do? Per usual, it will expand, which is what we saw every single day of this week, pretty much. It's just a 10 o'clock continuation. So this is what we're trading, right? The GxT model. We have a reversal prior to that 4-hour open, so we're just trading continuation, right, within that 4-hour candle. So when I drop to the 5-minute or the 3-minute, now I'm using the 3-minute here just because I view the 3-minute, 5-minute the same, right? So I'm not really strict with that necessarily. Now I traded InQ. This is my one critique I have here is I don't know why I'm trading the stronger asset. I'm gonna be real. I have no idea. When I go to ES here, it's weaker. It's like clearly weaker. But what I do see is YM take out this high here. So this is how I know it's probably an expansion and not consolidation, is because we see this SMT here, which is a reversal signature rate. So we can pair that with our, our closes here. So we have that hourly closer on NQ. Now I should have traded ES, but it doesn't really matter because it worked out. So when I look at the open here, this is the open of 10 a.m., this very next candle. And what we see is we have that SMT. The up close candle that created the SMT and ran out this short-term high gets closed over immediately, which is a good signature rate. So that was my entry. It was right here off this close and a stop loss a little bit of that above the high. And then just targeting this low. It was fairly simple, right? And price just rips lower, right? Very clean trade there. And yeah, as you see, the drivers gave me narrative here. And yeah, that was my week, guys. If you guys want me to go over my gold and oil, I can kind of group oil and gold in one video just because I didn't take that many trades. Probably took like 3 or 4. If you guys want me to go over that, let me know. Again, this is not going to be edited because I don't know how to edit yet. But I will get to that and create more like educational content on how to like frame trades or et cetera, right? Some concepts that are within the GxT model and whatnot. But hopefully this helped. It was a great week. And yeah, hopefully we have another great week and good luck in your trading. See y'all later.